Rate My Portfolio is the topic of today's presentation. And the portfolio that we're going to look at today belongs to an Italian businessman named Matteo. He's 48 years old, and this isn't actually him in the picture. In fact, that's not even his name. So the Rate My Portfolio series is something we offer paying subscribers. It's a review of their assets where we keep things anonymous and stick to weightings. So we get to benefit from the content that's produced. Our other subscribers get to benefit from the information. And of course, the person offering up their assets and portfolio hopefully takes some insights from what we're able to provide when we take a look at that. So since half our audience is international, we're going to avoid discussions of tax law. And we're going to try to guide, not dictate, and just adhere to the basic principles of investing, such as diversification. So let's meet Matteo. As I said, 48-year-old Italian. He's working in IT for a finance firm. So finance companies have a lot of money to spend on IT, and those individuals who are lucky enough to work there get to enjoy things like bonus structures. So when we look at Matteo's compensation, we can see that 20 to 30% of his gross salary is offered up as a performance bonus every year. He said that that's pretty much like clockwork. He's saving over half his monthly net income, so that's very good. When you work in finance, they have a lot of money to spend. So when I started at Morgan Stanley, IT expenditures were their biggest budget item, and they had practically built everything in-house, including the CRM system that we use. Now, they eventually moved to Salesforce, at least in our division that was spun out, but there's a lot of money to be made in finance when you work in IT. Matteo is a family man, and that's reflected in his AUM statement. So, for example, he provided us information about a couple life insurance policies that he has. We wouldn't consider those assets, and I don't think he does either, but it pointed out to us that he's thinking about the future for his family and planning accordingly. So he also noted a termination, a reasonable fee that he would get if terminated from his firm. So he set himself up quite well in terms of any being blindsided by any bad events. He provided the year-to-date performance of his stock portfolio level, I suppose, as anyone would do. But when you see that, you always have to ask, well, what benchmark do we use to put that performance in context? So before we do that, we want to start at what we call an AUM level. AUM stands for assets under management. So Matteo himself put this together. Excellent job. You see the chart there on the left. So he has his equity portfolio. Stocks is about 33% of all his assets. We go down the list. He has a property that he lives in, so his main home that's paid for. That's a great job there. Some private pension funds, an apartment that he rents out, so that provides some income, a bank deposit account, so that's sort of a emergency account, cash that he holds, some art, and for Matteo, investing in art involves holding it, and that's lovely if you're able to do that. We invest in art using a platform we'll talk a little bit about later. And he has some Bitcoin. So what we did here is simply take that chart and consolidate it a bit into property, which would be his biggest asset class, close to 40%, then his stock portfolio, then pension funds, cash, art, and Bitcoin. So the first thing that we'll look at here would be the stocks that Matteo's holding in his portfolio. So 15 stocks account for 75% of his entire weightings. He has 31 stocks in total. And there's a couple observations to make here. First of all, this is a well put together, diversified portfolio of stocks. The number seems right. That's manageable. We hold 37 ourselves. And when you start to get upwards of 30, when you're dealing with tech stocks and you're not dealing with dividend growth, which is a lot simpler, then it requires a little bit more maintenance. And I think this is a manageable number. Decision around the 10% rule. So he didn't mention anything about this, but the question here is, well, when should he trim? We have a rule that says trim as soon as an asset reaches more than 11% of our portfolio, we trim it down to 10. Well, that decision is in the context of the total portfolio. So since his stocks that you see here represent 33% or a third of his wealth, then that 9% weighting is really a 3% weighting. So technically, he could get to 27% here with Tesla before that starts to become 10% of his total net worth. So it's advisable. I think that any financial advisor would think that was a reasonable rule to suggest that you should never have a single stock be more than 10% of your total wealth. So perhaps Matteo here can set a limit that says, well, if a particular stock in this portfolio exceeds 25%, then I'm going to look at trimming it. Now, when we look at this list of stocks, we've covered nearly all of these. So what Matteo can do, and likely does as a paying subscriber, is that he reads the research that we've put out on these various companies. In some cases, we wouldn't hold a stock that he's holding. And I always enjoy seeing our paying subscribers holding assets that we say we're avoiding, because it shows they're capable of making their own decisions, as everybody should be. Instead of looking for somebody to make decisions for them, they say, you know what, I heard what you said, that sounds good, but I'm going to decide to do something different. And that's great when investors do that with conviction, because they're the ones that have to live with those decisions. As somebody once said, don't take advice from somebody unless they have to live with the consequences of it. So when we look at the names here, the only 3 names on his top 15 list there would be that we haven't covered would be Datadog. I'm actually working on a piece. I've been tasked with that follow-up there from the proposed Splunk acquisition. You can read our latest Splunk article on that to see where that's going. It's Global E-Online. I hadn't heard of this firm. They offer global e-commerce. It's perhaps we could poke around and look at that a bit, but I don't think that's something that we would cover. And then ClearPoint Neuro, that's very interesting. This is a micro cap. That's his second largest holding. So he must have some serious convictions around that firm. I took a quick look. It looks like they have approved medical devices. They're generating revenues. They have somewhere around $26 million. So looks like they're going to need to raise some cash either through debt or selling equity at some point. But that was an interesting stock to see in second place. But most of these names we're familiar with. Now, what Matteo's done here, he did a great job of breaking down everything. So on the left here, you can see where he's taken traditional sectors. So we see that, well, the software and IT services, that's quite heavy, right? He's over 50% weighting there. Automobiles, that's the Tesla component. And then you go down the list here. But then what he's done to the right of that, you see sector custom, is that he's taken those classifications and kind of refined them a bit to sort of show what he's targeting there. So you see, you have the software and IT services, e-commerce, artificial intelligence, cybersecurity, fintech, etc. He's done a great job here of breaking down weightings. That actually maps fairly closely, with the exception of microcaps, that maps to our own weightings. And then this country weighting, we'll talk a little bit about more about that in a second, but that matches very well to what you'd want to see. So I think if you look at all the developed markets in the world and the majority of stocks that are traded within them, the U.S. would constitute about 69% of the weighting. So you look at MSCI World, for example. Now, when we look at the one interesting thing he did, which isn't seen on this slide, is that he provided convictions, and he has high conviction, medium conviction, and low conviction. He doesn't have anything classified as low, meaning he's probably sold anything that he had a low conviction on already. But the medium convictions, meaning he's not entirely certain about these, and that's fair enough. But what's interesting to observe here are his medium convictions. 71% of companies in his portfolio that have less than $1 billion market cap are medium convictions. That's interesting, right? So 50% or half of the medium conviction companies you see here are below $1 billion market cap. So this is why we set that rule. We did a piece not too long ago that looked at micro caps. This was in the context of ARK Invest, and we showed some research, and you can twist the data and make it say whatever you want, but this was some compelling research that said this. The Sharpe ratio, so the value that you're getting for the risk you're taking isn't acceptable in micro-cap stocks. In other words, you're taking a lot more risk than the reward that you're getting. That's what Sharpe ratio measures. So that's interesting to think about there. But when you think about income, his home's not generating income, at least while he's living in it. That apartment will. He has a pension fund coming in 19 years, so the standard pension age in Italy is 67. It's interesting, to qualify for the state pension, you need to have made at least 20 years of Social Security contribution. So if they had that rule here in America, I'd be kind of screwed, because I've spent most of my, let's say half my career, working outside the United States. This pension, this state pension, is not considered in his AUM, and we believe it shouldn't be. So that's good that he's not adding that in. So I don't think any, and it raises the question, right? If you're looking at your assets under management, should you consider state pensions? I don't believe you should. And the pensions that were listed in Matteo's AUM calculations we looked at were all private pensions. We'll talk a little bit more about those in a second. But what I wanted to think more about was Matteo's exposure to Italy, Europe. Now, if Italy takes a tumble, is he overexposed to that market? Well, what are some things that he could do in terms of trying to diversify a bit away? Well, he's holding cash, presumably in euros, and one of the things that we did, we published a piece on this, is that we bought a basket of currencies with the cash that we just had sitting in our portfolio. So you could certainly use a decent platform like Interactive Brokers, which doesn't charge hardly anything to convert foreign currencies and hold a basket of currencies. He can review his private pensions. So the information he provided, one is holding Italian bonds paying 5%. Are there other options there? So you want to be aware, and I know because having been in that situation myself, and I know based on speaking with other people as well, pensions, 401ks, retirement accounts, these are often things people don't look at all. They just consider it done and dusted. But you really ought to look closer at those. He says, I do not know the mix of funds. This is for his larger private pension. He has two of them. One's from a previous employer. And this is for the large component, the majority. He says, I don't know the mix of funds, but it's a balanced, prudent equity/bonds with majority in bonds. So you want to look at the fees that you're paying there. And I know that these providers will oftentimes be limited on the selections that they offer, but all the pensions that I've seen, foreign ones that I've come across, allow you some allocation decisions. So I would suggest you go in and take a look at how you might configure things there in terms of the more holistic picture you've painted of your assets under management. One thing he could do here is consider increasing his alternative asset exposure with something fun. So we noted he had, around 2% in alternative assets. Could be a good use of bonus, since a lot of these options don't really accommodate DCA. And the question here, well, what should he be contributing towards with 19 years left? Well, one thing just on the topic of alternative assets, art, there's platforms like Masterworks, and these are some of the paintings that we hold some shares in on the Masterworks platform. It's very fun. And, when you're investing and you're doing quite well, as Matteo is, then you can afford to have some fun as well with your investments, such as art or wine. Those are two platforms that we use. But I looked, and they don't allow international investors, at least Masterworks doesn't. So you'd have to find a alternative, or just, purchase art. That's fun. It's clearly something that he seems to enjoy. Now, when we look at that AUM, some options here. Well, cash is important to hold because he has lower liquidity. So look at property and pension funds. He mentioned one of the smaller pension funds he could withdraw from, and I suppose the larger one as well. Usually there's some implications around doing that, at least here in the States. I don't know if it's the same over in Italy, but perhaps another bucket is in order here. So he could look at regional ETFs, ex-Europe and ex-USA. His stock portfolio is heavily weighted to the U.S., and just the fact that he's in Italy, which is part of the EU, so he has a lot of exposure in terms of his properties in the EU. So some regional ETFs, ex-Europe, USA. Equity exposure is pretty heavy in disruptive tech. I mean, you can use those sector classifications as you did, and we can look at it that way. But even with the custom classifications you put together, we can see most of those names we've covered, they fall under the disruptive tech sort of that umbrella. So I think adding equity exposure is reasonable, right? Considering he's heavy on the real estate and bonds right now, but probably not in the area of disruptive tech. So If he looks in how he can direct those private pensions and perhaps try to get some of that exposure to other regions, other things he could look at, for example, DGI stocks. These provide income component and stability. And those, we have an entire strategy built around those. And somebody in our Discord server had raised the question, how often do I check my DGI portfolio? Well, the answer is you end up not checking it very much at all because these companies don't move very much, and it's a whole lot different from tech investing. So when we look at international exposure for Matteo's portfolio, you can see here that he's listed out these different companies in terms of where they might be headquartered. And really, this starts to become complicated because then you have to, what you really want to look for is where their revenues are coming from geographically. And we do that. A red flag for us is if a company just takes in all the revenue from a single country. So when you're thinking about benchmarks, your equity portfolio could be benchmarked against NASDAQ, a tech sector index, or ARC. What to benchmark your entire assets under management against? Well, that's difficult. You could take a year-to-year approach. How much should I gain, lose this year compared to last year? But when you're constantly contributing money, this becomes tricky. So maybe you can look at a high water mark, and that's where the beauty of dollar cost averaging comes into focus. So if the market gets destroyed, you're happy that you're buying assets on the cheap. If it goes up, you're happy because your assets are going up. So just some last comments from Matteo. He says, I sleep well at night, even if some of my stocks are or have been down significantly. That's great, so he can tolerate risk. I invest when I have cash available, so not every month the same amount. That's understandable, especially considering that bonus structure. He says he used to invest in ETFs, but moved over time to only individual stocks. But now he'd like to invest in ETFs to better diversify sector country risk. So he's on the same wavelength as we are, having looked at his portfolio. We did that before reading these comments. He says, I still have 5 years of tax reimbursement for the government for a house refurbishment around such and such euros a year for the next 5 years. It's interesting to see that the Italian government pays you to refurbish a house, so that's a pretty good deal there. I would suggest the next step for Matteo is to check out these 2 videos we did on Asia funds and international funds. They're quite interesting. So Matteo's shown us how it's done, really. Excellent job breaking things out in a spreadsheet, tracking everything just as we do here at Nanalyze, keeping that AUM tab and adjusting the amounts, keeping a focus on that. It really is fun over time. And you see how when you're properly diversified, your wealth doesn't change that much. Whilst the market may be in a great deal of turmoil, your wealth keeps going up, especially when you keep contributing. Possibly expand your equity, though, that exposure outside of tech. And excellent work. Keep going, and you're all set, man. So I'm going to put up another video here. This will be the first one we did in the series in case you like to see that as well. But before you watch that, please click the Nanalyze logo on the right. Subscribe to our channel. Support our work. We don't run ads. We need your help. Thanks so much for taking the time to watch this today.